Good day everyone. Today the Group 5 will report the Module 5, which is the Cooperative Audit. Definition of auditing. By conducting auditing, it would be seen that an auditor has not only to see the arithmetical accuracy of the books of accounts, but also to go further and find out whether the transaction entered therein are correct or not. Audit is the examination or inspection of various books of accounts by an auditor, followed by physical checking of inventory to make sure that all departments are following documented system of recording transactions. Auditing guidelines in the Philippines. Pursuant to Section 3 of Republic Act 6939 and Act creating the Cooperative Development Authority or CDE and Article 80 of Republic Act 9520, otherwise known as the Philippine Cooperative Code of 2008. The following guidelines are issued to govern the accreditation of cooperative external auditors. Section 1. Definition of terms. Accreditation refers to the act of giving official authorization or approval to a qualified auditor to conduct financial audit to cooperatives. In addition, accreditation is the action or process of officially recognizing someone as having a particular status or being qualified to perform a particular activity. Cooperative Development Authority or CDE refers to the only government agency granting juridical personality to cooperatives, herein referred to as the authority. The Cooperative Development Authority, and in consonance with its function to formulate, adopt, and implement integrated and comprehensive plans and programs on cooperative development consistent with the national policy on cooperatives. Auditing firm refers to either the partners of a firm providing audit services or a sole practitioner providing audit services. As appropriate, it is a company or firm that provides audit service and may investigate potential theft and ensure compliance with applicable regulation and policies. Auditor in charge refers to the team leader of the audit engagement. This person is responsible for assigning tasks to the audit staff, monitors the progress of the work, and adjusts workloads to complete the audit on time. Cooperative External Auditor refers to an independent certified public account or CPA accredited by the CDA whose relationship to the client is express an opinion on the financial statement. He or she may be the signing partner in an auditing firm or a sole practitioner. In addition, Cooperative External Auditor inspecting financial statement to catch errors, misstatements, and fraud. Performing audits on systems, operation, and accounts, reporting audit findings, recommending improvements. Fraud refers to an intentional act by one or more individuals among management, employees, or third parties that result in misrepresentation of financial statements. It may involve. Fraud involves the false representation of facts, whether by internationally withholding important information or providing false statement to another party for the specific purpose of gaining something that may not have been provided without the deception. Partner refers to all members of a partnership or an audit firm but not necessarily conducting audit to cooperatives. Partnership refers to a professional partnership engaged in the practice of public accountancy, duly registered with the Securities and Exchange Commission. A partnership is a legal entity, a form of business. Audit engagement letter refers to a letter that informs the cooperative of an upcoming audit. It details the audit objectives, the timeline, and the audit team members. It also covers the pre-audit meeting, expected deliverable, and the audit team mission.
Section 2. Application requirements for initial accreditation. An individual certified public accountant, CPA, who seeks to be accredited as cooperative external auditor must accomplish and file the following documents directly to the Cooperative Development Authority, Extensions Office, where such CPA partnership auditing firm is based for individual CPA. For individual CPA, 1. Letter application. 2. Profile of the applicant with attached colored ID picture. 3. Valid professional regulation commission identification card. 4. Valid certificate of accreditation with the Professional Regulation Commission Board of Accountancy. Current professional tax receipt issued by the local government. Valid certificate of membership in good standing with the Philippine Institute of Certified Public Accountant, or certification of life-sustaining membership issued by the PICPA. Certificate of attendance to training equivalent to a minimum of 24 hours of required training as provided in Section 4 of these guidelines, and other documents that may be required by the CDA in case of inconsistencies in the submitted documents.
Section 3 Application Requirements for Renewal of Accreditation. Interested party must accomplish the following documents and file application for renewal directly to the CDA EO where such CPA partnership auditing firm is based. For individual CPA, 1. Application letter. 2. Updated profile of the applicant with updated 2x2 colored ID picture. 3. Valid PRC ID. 4. Valid certificate of accreditation with the PRC BOA. 5. Current PTR issued by the local government. 6. Valid certificate of membership in good standing with PICPA or its chapter. 7. Certificate of training equivalent to 24 hours of required training for renewal as provided in Section 4 of these guidelines. 8. Previous certificate of accreditation issued by the CDA. 9. List of cooperative clients and its audited. 10. Sworn statement by the cooperative external auditor that he has engaged in cooperative external audit or preparation of financial statement to at least one micro-cooperative that is free of charge as part of his/her social responsibility. Duty supported with certification from cooperatives that received such services. And 10. Sworn statement by the cooperative external auditor that he/she has observed the conditions prescribed under Section 9 of these guidelines. For partnership firm, 1. Letter application. 2. Updated profile of the audit firm. 3. Updated profile of the individual signing partners with updated 2x2 colored ID picture. 4. SEC registration certificate. 5. Articles of partnership and or its amendment. 6. Partnership valid certificate of accreditation with the PRC BOA. 7. Current PTR of signing partners. 8. Certificate of membership in good standing with PICPA of the signing partners. 9. Certificate of training of signing partners equivalent to 24 hours of required training for renewal as provided in Section 4 of these guidelines. 10. Latest certificate of accreditation issued by the CDA. 11. List of cooperative clients and years audited. 12. Sworn statement by the cooperative external auditor that he has engaged in cooperative external audit or preparation of financial statement to at least one micro-cooperative that is free of charge as part of his/her social responsibility. Duty supported with certification from cooperatives that received such services. And 13. Sworn statement that the partnership firm has observed the condition prescribed under Section 9 of these guidelines. The above requirements for accreditation, either for initial or renewal, shall be submitted in complete set with presentation of original copies. For authentication, otherwise application will not be accepted or processed. It means renewal of accreditation, continuation of accreditation based on surveys, visits, conferences, correspondence, and contents of the annual report, all the required documents need to be approved before an applicant government agency is accredited as a GOVRA.
4. Training requirements. Training requirements refers to the minimal training requirements and standard that the training provider must implement and maintain as detailed in Schedule 11. The initial renewal training requirements for accreditation of cooperative external auditor shall be comparable to a minimum of 24 hours of training. The PICPE, in collaboration with the CDE, will conduct this training in accordance with the training course outlines attached to this circular. Section 5, Accrediting Body. Accreditation bodies are the regulating authority that determine the suitability of any participating certifying body.
Section 6. Validity of accreditation and inclusion in CDA list. Accreditation of external auditor shall be valid for a period of 3 years from the date of issue. The CDA accredited cooperative external auditors may apply for the renewal of their accreditation within 3 months prior to the expiration. The provision of Section 3 of the accreditation criteria shall likewise apply. The CDA will circulate to all cooperatives the list of accredited cooperative external auditors periodically through its website. The CDA, however, shall not be held liable for any damage or loss that may arise from the defection of the accredited cooperative external auditors to be engaged by the cooperatives for regular or special audit engagements. Section 7. Accreditation fees. For initial, individual, 2,000 pesos. Partnership or firm, 5,000 pesos. For renewal, individual, 1,000 pesos. Partnership or firm, 3,000 pesos. For reapplication, individual, 2,000 pesos. Partnership or firm, 5,000 pesos. In case of denial or non-approval of application, any fees paid shall not refundable. What do you mean by accreditation fees? This fee structure features a consistent of accreditation fee that is due annually throughout the life of a program's accreditation to better access programs in long-term budgeting for accreditation costs. If this fee structure applies to your program, you will pay the same annual accreditation fee at the end of each year.
Audit coverage. For me, the audit coverage is an external audit function is preventative and ongoing, providing insight and suggestion to management, the cooperative, and to encompassing all governance, risks, and control processes, whereas an external financial audit tends to happen annual or less once every 5 years without a scope limited to financial the statement of coverage. Condition for engagement of an external auditor. The engagement of an external auditor is also known as a financial audit and statutory audit. An external auditor are either concerned without the accuracy of business account of the organization financial condition, or in some industry the organization complies with law and regulation.
Section 10 Reportorial Requirements. A. The external auditor shall prepare the audited financial statement in accordance with Philippine Financial Report Framework or PFRF for cooperatives, taking into consideration cooperative laws, rules, and regulations. At the minimum, the report shall meet the following requirements. A1 standard presentation and audited financial statement with cooperative figures of the immediately preceding year, which will include the following. First, the auditor's report. An opinion from an auditor on whether a company's financial statement comply with general accepted accounting principle and free from material misstatement. The main aim of this auditor report is to have reasonable assurance to company that its financial statements are free from error and frauds. Second, statement of financial condition, a statement that gives the financial condition of a business as of a given date. It is also known as a balance sheet, which is one of the reports prepared by accountants that show the condition or financial condition of a business or a company. Third, statement operations, a financial statement that evaluates a company's operation and a current financial standing. It also uses an equation that finds a company net income by subtracting its expenses from its revenue. And then next, statement of changes in equity to include changes in statutory funds. It summarizes the changes that occurred in owner's equity. It shows that updated ending balance or share of the capital account of owner of a business. So, the equity of the owner will show how much he has invested and how much is added out of profit of the business or deducted out of loss. Next, statement of cash flows. It provides information about the cash receipt and cash payments of an entity during period, and then the cash receipt or inflow and cash payments or outflow that indicate in statement of cash flow is categorized into operating, investing, and financing activities. Last, notes to financial statements. It's used to make important disclosure that explain the assumption and used to prepare the financial statement of a company. These notes financial statement provide additional information pertaining to a company, operations, and position are considered to be an important part of financial statement. 8.2. Statement of management responsibility. The management is responsible in evaluating the business, whether to continue as an ongoing concern. Their basis in accounting unless management either liquidate their corporation or to cease it. 8.3. Statement of presentation of the external auditor to the authority. This statement provided by the external auditor is a report of findings of financial statement, any potential errors and frauds, and giving recommendation thereof. For external auditor, it is crucial for them to understand not just the company's event but also the environment or any other exhibition that may have a significant event on the risk of material misstatement. A4. Audit findings and recommendation. These are the result of auditing wherein recommendation for that are given to that is approved by the management as well. 5. Ratios using cooperative financial standards of state PISO. This provided by showing table for financial performance indicators of cooperative including the formulas.
Section 11 means signings of audit report done by an audit firm partnership. For financial audit conducted by an accredited audit partnership, only the partners of the audit firm partnership who have attended the training requirements have submitted the necessary documents to the CDA shall sign the audit report of the cooperative to ensure that the requirement of the authority on financial audit and cooperative are substantially complied with. So there sa section 11 there means signing off audit report done by audit firm partnership. Ngani makita ang how to conduct, assign, and how to audit by partnership. So it means partnership means two person mag-partner or two or more person, not just one but many. So it will be submitted necessary by the CDA shall sign the audit report of the cooperative to ensure the requirements of the authority on financial audit of cooperative and substantially complied with. So means CDA must sign the audit report so that it will be complied with cooperative and the authority of the financial audit.
Section 12. Working paper retention. In all cases, accredited external auditor shall maintain the audit working paper for a minimum period of 7 years. Section 13. Updated of records. Record of the accredited cooperative external auditor submitted to the CDE shall be valid or updated at all times. In case the effectivity or validity of this record have lapsed, the cooperative external auditor must submit the valid documents to update his or her records to the CDA. Failure to do shall prompt the CDE to suspend or invalidate his or her accreditation. Under Section 14, grounds for non-approval of renewal. Number 1. Non-conduct of audit service or preparation of financial statement to at least one micro-cooperative free of charge as part of his or her social responsibility. Number 2. Non-observance of the 5 years limitation of audit engagement to a particular cooperative as provided in Section 9 of these guidelines and further clarified in MC 2014-02. Number 3. Conduct of the audit with invalid accreditation with CDA and PRC, BOA, and with expired PRC ID. And number 5. Non-disclosure of adverse findings to cooperatives as provided in Section 10 of these guidelines. The external auditor who have committed to above violation may reapply for accreditation after a period of 3 years following the initial accreditation process. Section 15. Revocation cancellation of accreditation. The following shall be the grounds for revocation and or cancellation for accreditation. Number 1. Misrepresentation of financial statements which are used by the cooperative and fraudulent acts. Number 2. Allowing the use of accreditation number by any unauthorized external auditor, and number 3. Other acts analogous to the foregoing. The procedure of revocation and cancellation of accreditation shall be in accordance with the rules of procedure to be promulgated by the authority. An external auditor who found to have committed the above-mentioned violation which resulted to the detriment of the cooperative shall be barred from conducting audit to cooperatives. Section 16. Repealing clause. Memorandum Circular Number 2009-03 dated September 14, 2009, and all other issuances inconsistent with these guidelines shall be deemed repealed and or modified accordingly. Section 17. Effectivity. This circular shall take effect 15 days following its filing 3 copies hereof with the Office of National Administration Register or UNAR, University of the Philippines Law Center, Diliman, Quezon City, pursuant to Presidential Memorandum Circular Number 11, dated October 9, 1992.
Auditing. A critical and systematic examination of a client's internal control system, accounting, transaction, records, and financial statements already prepared by management and staff, and other legal records and documents and management performance. Basic principles. Auditing is a systematic and independent examination of evidence, book of accounts, internal control system, risk management, and others, to enable expression of opinion as to the fairness of an entity financial statement in accordance with Philippine accounting standards. It is conducted periodically. It should be documented for review purposes for future improvement.
Who shall conduct the audit? Any competent persons not having direct responsibility of the entity being audited. Objectives: to enable expression of opinion on the fairness of the financial statements in accordance with the new Philippine accounting standards. Other objectives: an audit is conducted to find out whether an organization has set of procedures and systems in place to manage risks. 1. A requirement for any business management system. 2. To verify whether risk identification systems and mitigation procedures are working. 3. Find opportunities for improvement and provide management with information for continuous improvement on risks mitigation. The audit is intended to find improvement for the organization, not necessarily to find fault in the way people are doing things. Kinds of audit. 1. As to who will perform. 2. As to approach of the audit. A. Traditional audit. B. Internal audit. C. Risk-based audit. D. External audit. 3. As to what audit. A. Financial audit. B. Management audit. In any kind of audit, the management and auditor would have to prepare schedules and checklists to do a site or document auditor, both to get a complete picture of the organization's state of affairs. Scope of financial audit. 1. Examination of the books of accounts of the client. 2. All documents and evidence supporting the entries of the books of account for the year under audit. This means that the audit can be conducted internally by employees of the organization or externally by an outside certified public accountant. It would be planned and scheduled to investigate and develop implement action plans.
Value-added audit through risk-based approach. For the time being, we will at least assist in raising risk awareness and implementing risk management in areas such as good governance, financing, marketing, production, and staff, controls and procedures in office management and accounting. Concerning good governance, the auditor must examine the client's goals, objectives, plans, programs, policies, and implementation as well as the efficiency, effectiveness, fairness, accountability, transparency, and internal controls of the board of directors, committees, and management staff. On risk management, the auditor must assess and help mitigate risk management system in 5 areas. Strategic risk. A company's strategic risk is the risk of making for business decisions. Strategic risk is frequently a crucial aspect in establishing a company's worth, especially when the company's values drop and dramatically in a short period of time. It is a leading factor in modern risk management because of this and its impact on compliance risk. Credit risk. A credit risk is the risk of a debt default resulting from a borrower's failures to make due payments. The leaders bear the risk first, which includes loss principal and interest, cash flows, disruption, and higher collection expenses. The loss could be total or partial. Higher levels of credit risk will be associated with higher borrowing rates in an efficient market. As a result, borrowing cost metric like yield spreads can be used to infer credit risk levels based on market participants' opinions. Next. Market risk, liquidity risk, operational risk. Liquidity risk relates to a company's ability to turn its assets into cash when it needs money, as well as its daily cash flow. Fraud, lawsuits, and personnel concern are examples of operational risks that arise as a result of a company's routine commercial activity. On financing, the client's money ability to pay for timely payables, liquidity, and the relationship with financing institution solvency.
On marketing, The ability of the client to maximize sales service with the least amount of money involved through fast turnover of goods service shall be assessed. What is marketing? Marketing is getting someone who has need to know, like, and trust you with the intentional act of turning know, like, and trust into try, buy, repeat, and refer to get the entire logical path of moving someone for initial awareness to advocate. Marketing is the process of getting people interested in your company, product, or service. This happens through marketing research analysis and understanding your ideal customer interest. Marketing pertains to all aspects of business, including product development, distribution methods, sales, and advertising. On the accounting aspects, the auditor must investigate how to manage has effectively utilized the financial report and discussion making. This can be determined in the policies, plans, and program budget and result of operation of the client.
Other procedure may also be conducted. Frequency of audit. Other procedure may be also conducted from time to time for continuing audit engagement. So some of audit procedure, it will be conducted time to time. Review of audit committee report. The audit committee shall submit the audit report to the BOD at least regularly. So the audit committee is the one who is responsible to oversee the financial report process, in which she give the audit report to the BOD, which is the board of directors. The external auditor should also review the recommendation whether acted upon by the management. Year-end audit. The Philippine Cooperative Code of 2018 RE 9520 requires cooperative to be audited by accredited external auditor. BSBA and SEC also require banks and SEC registered entities to be audited by accredited auditors. An external auditor team comes in to review and verify your financial records. So during the year audit, the external auditor, it helps to identify any problems that have been overlooked throughout the year. And then, if your company is public, you will be required by law to have external auditors. But even the private companies, it can be benefit from them as well. Some competencies required for the auditors. Number 1, adequate technical training and proficiency in accounting, in which is he or she is good enough in training when it comes to technology, and also she is also expert about accounting. Number 2, familiarity with business and legal nature of the cooperatives, banks, and NGOs and other clients. When it comes to business, she will be background about the business field and knowledge about this kind of business cooperative. Number 3, deep sense of responsibility, like good moral characters. Qualifications. Number 1, at least with mathematics ability. He or she has ability in terms of math. 2, capable of self-learning of work and on-field work. Number 3, at least fair analytic approach. Number 4, at least acceptable office and work problem-solving skills. Number 5, willingness and ability to serve the clients. Number 6, willingness to continually learn. She or he has ability to learn new things on a regular basis. Number 7, willingness and ability to be a team player. He or she has ability to work well with others' team. Number 8, willingness to assume responsibilities and challenges. Has eagerness to accept the challenges and obligation in business field. Number 9, willingness to think creatively. Number 10, willingness to align personal philosophy and objectives with your office nature of service.
Objective of cooperative audit. Number 1, verification of the accuracy of the books of accounts and ascertaining correctness of accounts. Number 2, direction of errors and errors of principles and prevention of such errors. Number 3, detections and preventions of frauds. Number 4, examination of the affair of the society to assess whether they have been carried accordance the provision of the cooperative law and the principles of the corporation sound business principle. Number 5, there are two things. A. Assessment of the extent to which the condition of the members, particularly communicators, have improved by operation of the society. B. Certification of the actual or loss incurred. And B. Certification of actual profit realized of loss incurred. So, objective of cooperative audit have five things. Number 1, verification means accuracy. Verify. Number 2, detection of critical errors. Mag-detect ng errors. Number 3, detection of and prevention of fraud. The prevention of frauds and the detect non-frauds. Number 4, examination of affairs of the society. The examination of different kind of affairs that happening in the society. Number 5, assessment of the extent to which the condition. Ang mga daw na nga doon na extension, mga different kinds of condition. Number B, sa B of number 5 is certification of actual profit. So, dito na makita how to certify the profit. That's how the objective of the cooperative audit.
Here are the advantages of audit. Number 1. Apart from the detection of errors, fraud, a regular audit would help to keep the books of accounts of a business concern up to date. Number 2. The fact that audit is being done at regular intervals will act as a moral check and prevent fraud and errors to a certain extent. Number 3. It also helps to provide an independent opinion to the members' general body about the management of their committee and the institution. Number 4. Audited accounts are usually relied upon for the purpose of assessing the income tax and sales tax and for disbursement of government assistance. Number 5. An efficient audit is a safeguard to the creditors whose investment enable the institution to conduct its business. And number 6. The audit helps to ascertain the correct and true state affairs of the business, which consequently enables the institution to secure necessary finance and the certificate of the audited balance sheet.